Namaskar, it's good to be back with you once again with a few focused stories from the world of demand pulls and supply chains from an Indian perspective. On the program, Diwali 2025 sees a record 6.05 lakh crore rupees festive trade, led by 5.40 lakh crore rupees in goods and 65,000 crore rupees in services, says CAIT. Australia and the US find rare earths a rare deal. They found a rare deal amidst the rare earths, amid Chinese restrictions on the critical minerals. Trump says in future, these rare earths are going to be worth about $2. Sanai Takaichi is ready to kickstart Japanese economy with a more than $92 billion stimulus. Her advice: work like a horse. The Amazon Web Services outage, it sends notice to the digital dependent world. Cloud services too need backups. Before we move on, let's listen to Commerce and Industry Minister Piyush Goyal speaking at the 16th session of the United Nations Conference on Trade and Development, UNCTAD, in Geneva. He reiterated India's commitment to self-reliance, large infrastructure investments, and initiatives to strengthen transport and logistics networks. The successful India model, in fact, can be a template for South-South cooperation.
India's own development journey can provide a good template to address some of these issues. And we stand ready to share with everybody the various initiatives, the various practices, our own new way of working that we are trying to introduce in India. In fact, it is no mean achievement that today we are amongst the top 5 GDPs in the world. We are the fastest growing large economy in the world for the last 4 years. Our last quarter's growth was 7.8% at real prices. We are, in US dollar terms, nominal growth is about 9.5% every year, and therefore doubling our economy every 8 years. We've lifted nearly 250 million people out of poverty in the last 12 years.
Okay, so our top story today is about Diwali record sales. Coming up behind me are these sales, record-breaking sales, a total festive trade hitting 6.05 lakh crore rupees, out of which 5.4 lakh crore rupees were in goods and 65,000 crore rupees in services. What does this indicate? It's a double impact of the strong festive sentiment as well as reduced GST rates. Let's try and break this down a little further. And how did this come about? CAIT, which is the Confederation of All India Traders, they have come to these figures, and they've done it through a nationwide survey. As you can see, the data is collected from 60 major distribution hubs, metros, tier 2, tier 3 cities, and this is through their Research and Trade Development Society. So they have put together this through a proper research survey of about 60 cities. Now, let's say that apart from this, we can see that there is a Swadeshi surge. This is the result largely of a campaign, for Atmanirbhar Bharat. Also, local is vocal for local. And the traders themselves, have opted for the Swadeshi goods, to sell the Swadeshi goods, rather than importing the cheaper alternatives, or let's say alternatives from China. And so there has been a sharp drop in the demand for Chinese products during the festive season. That's an interesting, analysis. Let's look at what we are seeing also, according to this, is that there is a retail revival. It means that the traditional markets, where people wanted to go and get physical go to the markets physically, see the products that they were buying, get a feel of them, and by 85% of the trade has come from the traditional markets and only about 15% from online. So this is a strong comeback, in fact, for the small traders, as we can see. So significant, we can see there that this is a clear sign that most people have preferred the physical brick and mortar stores rather than the online trade. Our next slide will talk about the kind of products that are being sold, that were sold, and that's why we can see why people wanted to go to the traditional stores. FMCG, of course, a lot of them, 12% of that is FMCGs, so that fast-moving consumer goods. Then gold and jewelry, naturally you would like to go and see that and buy them. And then electronics as well, about 8%. Home decor, furnishings as well, you need to go and check that out from the store. And what better time than the festive season to do all this? So majority of the products also have indicated why the traditional markets have done well. Moving on to our next slide then, we can also see that there has been a services boom. Why? What are the services that we're talking about? Packaging, hospitality, travel, logistics have all seen a significant boom, and we've seen 65,000 crore rupees in festive impact, and that is beyond the retail sector. So it's combining well. I mean, the economy is clearly seeing a demand from all sides, including in the services sector. Finally, we can look at what is the real reasons for this. I've already mentioned to you that there's festive sentiment, there's GST trade, but according to the survey, traders have credited the GST rates reduction for this huge surge in demand. And then if we look at the trader confidence index, it is at 8.6%. 8.6% of the traders confidence index. It implies, in fact, that there is very strong optimism amongst traders. That means they're willing to take risks because they're optimistic about what their likely outcome is. And we can see that the same willingness is amongst the consumers as well, because the consumers index also was at 8.4%, and that is the highest in a decade. The willingness to spend and support the domestic goods and export, and they are also expecting good deals at a time like this. We can see that, Diwali trade has generated, in terms of jobs, about 50 lakh temporary jobs were generated, and this is also from the rural and semi-urban areas, contributing about 28% of the total trade. So there was significant amount of trade coming in from the rural and semi-urban areas, creating jobs all across. About 50 lakh temporary jobs were created because of this surge. So the CAIT has, requested for this to continue. They require to have some reforms in the reforms in GST compliance, credit access, all this needs to continue for it to sustain this growth. And also logistics, digital payments, all these things, they feel that they need to be encouraged. And then, of course, the government is already strengthening urban infrastructure, and all this is to sustain growth. Right. We're going to take a short break at this point of time. Do stay with us. We're taking a short break.
Complex issues, hidden agendas, twists and turns, strategic games. We think all dots are linked. We just need to connect them. Join me every week as I connect the dots to unravel hidden designs in statecraft, mysteries, and decode issues that matter to you. Watch Connecting the Dots with me at these times on DD India.
Welcome to Jaipur.
Now, before we introduce you to our guest on the program, let's also continue to listen to the excerpts of the Commerce Minister Piyush Goyal and his address to UNCTAD at that meeting in Geneva earlier this week. And he speaks about the growth of India's middle class, and that in a way explains also the increase in the consumption appetite that I was speaking about a little earlier.
All of this has been possible because we've had a focused effort on eliminating poverty, and these people coming out of poverty into the middle classes are providing that huge demand that is generated out of rising incomes. Our focus on huge amounts of investments in infrastructure and strengthening our fundamentals, the macroeconomic fundamentals, have collectively helped us make India, I would say, the envy of the world.
And Prasajit Basu, economist and author, is joining us via Zoom link. Thank you very much, Prasajit Basu. Mr. Basu, what do you read into, the Swadeshi surge among consumers? Does it also give the Atmanirbhar Bharat production theme, a big boost?
Oh, absolutely. I think the reduction in GST rates, the reduction in income tax rates this year, all of that is contributing to a strong surge of consumption spending. Private consumption is picking up strongly. And there is also a global phenomenon of countries relying on their own resources. Trade is beginning to shrink a little bit because of the Trump administration's actions in the US and similar actions in other countries. So there's a sentiment towards buying Indian products, buying local, and that is manifested in this enormous surge of spending during the Diwali holidays. I think it was about a little over 6.05 trillion rupees spent during that period, a big increase on normal levels of spending. So this is positive, and I think it reflects the combination of factors, including the global backdrop.
But can this consumption demand be sustained, Mr. Basu? The festive season hangover, how long can it continue?
Well, obviously, the festive season is a period when people are on holiday. You get some bonuses, etc. So there will be a spike in consumption spending during that period. But the reduction in prices resulting from an effective reduction of 2 percentage points in the GST rates for all products is a benefit that will not just occur for a brief period, but will be permanent and will really be holding good for the rest of the year. And so I think that private consumption is going to get a boost now, and that boost will continue. Of course, it won't be as big a spike as we saw during the festive period, which is an annual event and which sees big spikes anyway. But this year, the amount of spending was greater than normal, and that I think is reflective of the likelihood of continued strength in consumption spending going forward.
Likely to continue because of the GST rates. That's going to be, it will take some time for people to continue to absorb that. But, let's stay with us, Mr. Basu, for our next story, which is about the US and Australia signing an $8.5 billion deal. It's to secure rare earths and cut their reliance on China. They hope to tap Australia's $53 billion in mineral reserves. Over 6 months, they'll invest billions, set floor prices as well, and then there's going to be fast-track mining, reshaping clean energy as well as defense supply chains. Let's look at the report.
The US views Australia as a key ally in securing rare earths. It signed an $8.5 billion deal to tap Australia's $53 billion in untapped mineral reserves. Both nations will invest heavily in mining, set price floors, and offer financing with guaranteed supply rights to stabilize markets.
Part of this deal is very specific, $8.5 billion pipeline. There'll be $1 billion contributed from Australia and the United States over the next 6 months with projects that are immediately available.
The US and Australia aim to curb China's dominance by diversifying rare earth sources. These minerals are vital for defense and tech. US President Trump supports boosting supply to prevent Chinese monopolies.
In about a year from now, we'll have so much critical mineral and rare earths that you won't know what to do with them. They'll be worth about $2.
Australia and the US have committed to at least $1 billion in public funding to support the $8.5 billion pipeline of mining and processing projects. Analysts hope there will be many more such agreements with other countries like Canada, Brazil, Greenland, and the like.
It's a bit of a North Star for the industry. There's an anticipation that this will be the start of inking many more agreements that would fall under the framework. But that does need to happen. Time is of the essence.
In the US-Australia deal, a floor price is expected to stabilize markets and attract investment, while long-term deals give the US priority access to Australian rare earths.
Australia has had a view for some time, a bit similar to putting America first.
Right.
Our plan's called A Future Made in Australia, which is about not just digging things up and exporting them, but how do we make sure that we have across the supply chains with our friends being able to benefit, seize those opportunities.
Both governments will align policies to ease approvals and cut risks. In 6 months, focus will be on key projects, joint funding, aligned regulations, and a task force to drive progress and industry coordination.
It looks like the agreement has given a 6-month time frame for a whole bunch of things to happen. I think that's a reasonable time frame, but you would want, and the markets would expect that there'd be a lot of ancillary announcements in that time.
The goal is to build a resilient supply chain that cuts reliance on China within a decade. Rare earths also power clean tech like EVs, turbines, and solar panels, aiding the US's energy transition. The Economic Brief, DD India.
Well, Prasenjit Basu continues to be with us. Mr. Basu, they seem to be fast-tracking this. Now, how quickly do you see China being affected in the processing segment of rare earths?
It'll take some time for new processing plants to emerge. I think it's important to understand also that India is among the top 3 to 5 resource bases for most rare earths. So what is being discussed between Australia and the US could just as well be discussed between Australia and India, India and the US, etc.
Right.
There is one Australian processing company called Lynas. It's the only significant processor of rare earths outside China. There were many around the world until 20 or 30 years ago, but the world has allowed China to develop a monopoly. And that monopoly needs to be broken because China is now weaponizing that monopoly. And this monopoly in processing rare earths is not confined just to rare earths, because there's a lot of mining technology. For instance, if you look at nickel, most of the nickel in the world, it comes from places like Indonesia and the Philippines. But almost all of the processing of nickel, the smelting and further processing, almost all of that used to happen in China until about a decade ago. A decade ago, Indonesia began to make it very difficult for nickel to be taken out of Indonesia to be processed anywhere else. And so over the last 10 years, nickel smelters have come up all across Indonesia, and that has rebuilt a nickel manufacturing sector in Indonesia. So similar things are going to happen with rare earths. Now, if you look at, there are some rare earths that are closely linked to aluminium. India is the second biggest producer of aluminium in the world. So we are the third or fourth biggest producer of bauxite, but we're the second biggest producer of aluminium.
Right.
So we could easily become a significant processor. There are some that are linked to zinc, and the world's largest zinc manufacturing company is Hindustan Zinc. So there are opportunities
Right.
to,
Let
India
me
to
come in
also
there.
participate
Let
in
me
this.
come in there, Mr. Basu. You have been mentioning India has substantial reserves. They are, in Kerala, Andhra Pradesh, Tamil Nadu, Gujarat, Odisha. But the question is, how quickly can India transition to processing? Because I mean, you talked about mining, but China is ahead in processing, as you say.
Well, processing is where China has a near monopoly at the moment, but it is not a monopoly. It is a near monopoly. Others used to do it in the past. It isn't a very, very complex thing to do the processing of critical minerals, but it is estimated to take 2 or 3 years for alternative sources of processing to credibly emerge. India really must participate in that so that we are not held to ransom the way China is currently holding the US to ransom. About 10 or 15 years ago, they were similarly holding Japan to ransom. The world's biggest electronics manufacturing country is in fact Japan still.
Right.
And but Japan too requires some rare earth materials that come primarily from China. So we need to work with our partners. We need to work with countries like Japan, Australia, the US.
Right.
So obviously, we have something called the Quad, where these 4 countries are supposed to be strategic partners.
Okay.
If the US doesn't want to fully participate with us, we could look to Japan and Australia. We could look to others. We could look to Korea.
Absolutely.
We could look to Malaysia. These are countries that have some processing experience with rare earth.
As the report also said, time is of the essence. So we leave it there. Thank you very much, Mr. Prashanjit Basu. Thanks for being with us on this program. Now, Japan has made history. Sanae Takaichi has become the country's first female prime minister. Markets have already labeled her policy approach as Takaichi trade, in fact. But what does this leadership change actually mean for Japan's economy and for India's growing partnership with Tokyo? Tarun Vadghaya's report gives us the details.
Takaichi Sanae has been elected Japan's Prime Minister with strong lower house support, forming a governing coalition backed by the Japan Innovation Party. Her leadership begins amid economic challenges, including inflation, a weakening yen, and public concern over living costs. Economists believe Takaichi's policies will echo Abenomics, with tax cuts, including a temporary halt to the food consumption tax and increased spending on social programs like free high school education. Analysts expect her to favor growth over austerity, promoting fiscal stimulus despite rising public debt.
I am firmly determined to build a strong Japanese economy and to protect Japan's national interests through diplomacy and security. I think that the demand-pull inflation is the ideal form. Until the demand-led economic growth is achieved, we must maintain close communication with the Bank of Japan.
Markets dub it the Takaichi trade as the Nikkei 225 surged on stimulus hopes. Investors expect her to uphold Japan's ultra-loose monetary policy, prioritizing growth over yen stability. The yen has weakened to around 150 per dollar, signaling expectations of sustained low interest rates.
She wants to see more fiscal stimulus, more spending as a way of trying to kickstart the economy. I think this is not something new, right? This is the ideology of Prime Minister Abe and pretty much what most LD prime ministers have done since the 1970s.
Takaichi's rise may strengthen India-Japan ties in semiconductors, AI and clean energy. Experts expect more Japanese investment as both nations aim to reduce China dependence. Her first summit is with US President Donald Trump in Japan later this month, followed by ASEAN talks in Kuala Lumpur.
I would like to take the time to build trust, actively make proposals from Japan, and demonstrate our presence. I am strongly determined to restore Japanese diplomacy to a place where it flourishes in the center of the world.
Challenges persist. Japan's debt exceeds 250% of GDP. Takaichi must balance stimulus with fiscal trust. Japan's first woman Prime Minister is preparing an economic stimulus package that is likely to exceed last year's $92 billion to help households tackle inflation. Her win has inspired hope for a bold, transformative chapter in Asia's economy. Tarun Badgahia's report for the Economic Brief, DD India.
Well, our final report is from the tech world, and global outage at Amazon Web Services this week disrupted major platforms and businesses across continents, from streaming and gaming to payments and airlines. And in fact, this incident exposed how much of the global economy now runs on a handful of cloud providers and how quickly that dependence can ripple across sectors. Deeptanshu Kashyap explains. Thanks very much for watching the Economic Brief. Namaskar.
A global internet outage this week revealed how dependent the world has become on a few cloud giants. Amazon Web Services, the backbone of much of the internet, suffered a disruption that took major platforms like Reddit, Snapchat, Venmo, and Delta Airlines offline. The glitch, traced to AWS's main US hub in Virginia, caused widespread service failures for nearly 3 hours before engineers restored most systems. Amazon later said the fault lay in its internal network health monitor, the system that keeps its cloud running.
I mean, the ripple effects of this is obvious. We've all become very dependent on cloud, on the big hyperscalers. So the advantage there is that we get great products, services, they're able to amortize a lot of what they do across a wide base. We live in an era right now where we are very dependent on the cloud providers, so we need them to be at the top of their game, and today Amazon was not.
AWS powers nearly 1/3 of the world's cloud infrastructure, supporting millions of applications in 190 countries. The outage caused a spike in error rates and latencies, primarily affecting the EC2 internal network and the DynamoDB database. EC2 provides cloud-based computing power, while DynamoDB handles fast, flexible data storage. Over 4 million user reports were logged globally. Analysts estimate each hour of downtime at this scale costs millions in lost productivity for businesses worldwide.
This is the way we think about it in cybersecurity. The infrastructure level, that's what Amazon does for us. They provide buckets, they provide storage, they provide service. But then above that is all the stuff we build. Those are our applications and systems and interactions and websites and web apps and so on. We can do everything to improve that.
While most systems were restored within 3 hours, services like AWS Configuration, Redshift, and Connect continued processing backlogs. However, such a massive outage has not happened for the first time. Major tech outages have disrupted the world over the years. British Airways stranded 75,000 passengers in 2017. Google took YouTube, Gmail, and Drive offline for an hour in 2020. In 2021, Fastly and Akamai caused brief global disruptions, while Meta dark for 6 hours. Twitter faced an outage in 2022, followed by CrowdStrike in 2024. For policymakers and businesses, the message is clear. The cloud is no longer just a convenience. It is critical infrastructure. For Amazon, Monday's outage may be temporary, but the scrutiny will not be. As the world races towards an AI-driven future built on ever-expanding digital networks, resilience, not just scale, will define the next phase of the global cloud economy. Deeptanshu Kashyap's report for the Economic Brief, DD India.